In the collective imagination, the world of stock market speculation is one of frantic energy. It is a domain of split-second decisions, of constant action, and of fortunes made or lost in the blink of an eye. The novice trader, influenced by this dramatic picture, believes that to be successful is to be perpetually busy, always buying, always selling, always engaged with the market's every move. But this perception, however common, is a dangerous illusion. For William Delbert Gann, after a lifetime of study and active trading that spanned more than 45 years, the greatest secret to success was not found in constant action, but in its polar opposite. Profound, strategic, and unwavering patience. William Delbert Gann taught that patience was not a passive virtue for the trader, but an active and powerful weapon. He observed that the vast majority of losses suffered by the public were not the result of poor analysis or a flawed method, but were the direct consequence of trading too frequently and without a definite rule-based cause. The average man, he noted, enters the market not because his rules have given him a clear signal, but because he is driven by the destructive emotions of hope, fear, and, most of all, impatience. He hopes for quick profits, fears missing out on a move, and lacks the discipline to wait for a true opportunity to present itself. This video will explore the core of the Gann methodology, the discipline of patience and the science of waiting for definite setups. It is a lesson in how to transform speculation from a frantic gamble into what he rightly called it, a profitable profession. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. To understand the immense power of patience, one must first conduct a thorough examination of its destructive opposite. William Delbert Gann identified overtrading, the act of trading too much and too often for one's capital, as the single greatest evil in Wall Street. It is the primary cause of more losses than any other factor, a fatal flaw that has been the ruin of countless traders, both large and small. This failure stems from a deep-seated psychological trap, the feeling of anxiety that comes from waiting. The unprepared trader feels that if he is not in the market, he is not participating, that he is missing opportunities. He gets into the market simply because he is anxious from waiting, a decision based not on logic but on a restless impulse. This impulse leads directly to a mathematical certainty of failure. In his work, Truth of the Stock Tape, William Delbert Gann provides a stark calculation to illustrate this point. He contrasts two types of traders. The first is the impatient scalper, the man who is in and out of the market constantly. If this man makes just one trade for every market day, he will execute approximately 300 trades in a year. Each round turn, including commissions, taxes, and the bid-ask spread, costs him at least half a point. On a 100-share trade, this amounts to a 150-point handicap over the course of the year. William Delbert Gann asks, where is the man who can make money with such a handicap? The second trader is the patient professional. He waits for the major opportunities. Perhaps he makes only one trade per month, for a total of 12 trades in a year. His total cost for the year is a mere 6 points against the scalper's 150. The patient man has a 144-point head start before either trader has even analyzed a chart. This is not a matter of opinion. It is a matter of simple arithmetic. Overtrading is a guaranteed path to draining your capital, even if your market judgment is occasionally correct. Beyond the direct financial cost, overtrading fundamentally increases the probability of error. Every trade is a decision, and every decision carries the risk of being wrong. The more times a man gets in and out of the market, the more times he changes his judgment, and the more his percentage of being wrong increases. This is because these frequent decisions are rarely based on a sound, logical reason. They are emotional reactions to the market's minor fluctuations, driven by hope and fear. This brings us to the psychological poison that impatience injects into the decision-making process. The impatient trader buys because he hopes for a quick gain. Hope, William Delbert Gann warned, is the basis for pure gambling and will ruin any man who follows it in the stock market. Hope is not a strategy. It is a wish, an emotional desire that has no place in a professional operation. When a trade is made on hope, and it inevitably goes against the trader, the emotion quickly inverts to fear. The trader holds on, hoping for a recovery, watching his loss grow larger. Finally, as the margin clerk's call looms, hope gives way to despair, and he sells out in a panic, often at the very bottom of the decline. He bought on hope and sold on fear, the two greatest enemies of success. The patient trader, by contrast, feels neither of these emotions. He does not need to hope because he has waited for a definite, rule-based signal to enter the market. He does not fear because he has protected his trade with a stop-loss order, knowing that his potential loss is strictly limited. Patience is the bridge that carries the trader from the chaotic realm of emotion to the orderly world of rules and facts. The very structure of market movements is designed to exploit the weakness of the impatient. In How the Tape Fools You, William Delbert Gann explains that the daily fluctuations are often meaningless noise, intended to deceive the multitude. A strong advance will be punctuated by sharp, scary-looking reactions that last a few hours or a few days. These moves have no bearing on the main trend, but they are perfectly designed to frighten the impatient trader out of a profitable long position. Conversely, in a major bear market, there will be quick, hopeful rallies. The impatient trader who sold short near the top loses his nerve and covers his position for a small profit, only to watch the main trend resume its downward course. For this reason, William Delbert Gann strongly advised against watching the ticker tape constantly. He argued that it is nearly impossible for a man to sit in a broker's office surrounded by gossip, rumors, and the minute-to-minute gyrations of the tape, and not be emotionally influenced. The tape will make you change your mind a dozen times a day, and 90% of those changes will be wrong because they are reactions to minor moves, not reasoned responses to a change in the major trend. The tape is a tool for manipulators to advertise their wares. When they wish to distribute stock at the top, they create wild activity and wide fluctuations, making the stock look its strongest. The impatient public, fearing they will miss the move, rushes in to buy, absorbing the stock that the insiders are eager to sell. When insiders are accumulating at the bottom, they allow the stock to become dull and inactive, making it look weak and unattractive. The impatient trader loses interest or sells in disgust, giving the insiders the very shares they wish to acquire. The patient professional understands this game. He is not concerned with the daily noise. He is waiting for the great campaigns to be completed. He knows that it takes a long time, weeks, months, sometimes even a year, for a large amount of stock to be accumulated at the bottom or distributed at the top. He does not try to catch every 10-point swing. He is waiting for the one or two great opportunities each year when the market gives a definite, unmistakable signal that a major move is ready to begin. He knows that by being patient, he avoids the financial drain of overtrading and the emotional drain of being constantly whipsawed by meaningless fluctuations. He understands that his greatest profits will not come from constant activity, but from a few well-chosen trades that are based on a period of prolonged and patient waiting. The first step to becoming a master trader, therefore, is to conquer the impulse for constant action and to learn to sit still, waiting for the market to reveal its true intentions. But if the secret is to wait, then the critical question becomes, what precisely are we waiting for? Having established that impatience and overtrading, driven by the destructive emotions of hope and fear, are the primary causes of failure in the speculative markets, we arrive at the essential question. If the secret is to wait, then what precisely is the professional trader waiting for? The answer, according to the lifelong work of William Delbert Gann, is a definite indication. He did not act on whims, tips, or his own desires. He acted only when the market itself, through its recorded action on the stock tape, provided a clear, rule-based, and historically verifiable signal that a major move was ready to begin. His patience was not an empty, passive state. It was an active, vigilant observation, a process of waiting for a very specific set of conditions to align. This is the mechanical core of his entire strategy. William Delbert Gann viewed the market as a great building under construction. He wrote, "Before any stock or group of stocks starts on a big advance or decline, a long period of time is required for preparation or accumulation and distribution. It requires time to prepare and lay the foundation for a building. The larger the building, the more time required to construct the foundation. It is the same with stocks. The greater the advance or the decline, the more time required in preparing for it. The impatient trader rushes onto the construction site while the foundation is still being poured, risking his capital amidst the noise, dust, and chaos. The patient professional, however, waits. He waits for the foundation to be completed, for the structure to be proven sound, and only then does he commit his capital. His primary task, therefore, is to learn how to recognize when this period of preparation is finished and the real move is about to get underway. The first and most important setup William Delbert Gann waited for was the completion of these great zones of accumulation and distribution. Accumulation is the process by which insiders, or the composite man, quietly buy a large line of stock from the public at low prices after a long decline. This process can take many months and in some cases years. It is characterized on a chart by a stock moving sideways in a prolonged trading range. During this time, the fluctuations are often narrow and the volume of sales may be small, a sign of public disinterest. William Delbert Gann taught that this period of dullness is where the groundwork for a massive bull market is laid. The patient trader's job during this phase is simply to watch and wait. To trade within this range is to be whipsawed by the minor, meaningless moves designed to shake out weak holders. The real profits are not made inside the zone of preparation. They are made after the stock breaks out of it. Distribution is the mirror image of this process. It occurs at the top of a long advance when the insiders who accumulated the stock at low prices are now selling it to an excited and optimistic public at high prices. This phase is often characterized by wide, volatile fluctuations and enormous volumes of trading. The public mistakes this feverish activity for strength, but the trained eye of a Gann analyst sees it for what it is: the methodical transfer of stock from strong, informed hands into weak, uninformed hands. Just as with accumulation, the patient trader does not try to guess the exact top within this violent trading range. He waits for the distribution to be completed and for the stock to give a definite signal that the next major move, downward, is about to begin. The first and most fundamental act of patience, therefore, is to wait for this essential preparatory work to conclude. After identifying a stock that has undergone a long period of preparation, the next definite signal William Delbert Gann waited for was the crossing of old levels. He considered this to be one of the most reliable indications in all of his work. He wrote, "When stocks establish certain levels of accumulation or distribution over a long number of months or years, and then cross them, it is almost a sure sign that they are going to new high or low levels. An old top, where a stock met heavy selling on a previous advance, represents a formidable wall of resistance. For the stock to break through that old top, the buying power or demand must be immensely powerful, strong enough to absorb all the residual supply at that level. Therefore, when a stock that has been consolidating for months finally breaks out and moves into new high territory, it is a signal of immense strength. This is the moment the patient trader has been waiting for." William Delbert Gann was adamant on this point. It is far safer to buy a stock after it has broken into new high ground than to buy it while it is still struggling below its old tops. He reasoned that the first time a stock attacks an old high, it is likely to meet with a great deal of selling and be driven back. But the second time it moves through that level, much of the overhead supply has already been absorbed, and the path of least resistance is now clearly upward. The same logic applies in reverse for a bear market. When a stock breaks below a major, long-standing support level, It is a definite indication of extreme weakness and a signal that a major decline is underway. The impatient trader tries to guess the breakout before it happens. The professional waits for the breakout to occur, and then he acts decisively. Even after a breakout into new territory, William Delbert Gann often waited for one final confirming piece of evidence before committing his full line of capital. He identified what he called the safest buying and selling points, which are based on waiting for the market to test its new trend. He outlined this process with mechanical precision in his book, 45 Years in Wall Street. For a buy setup, the sequence is as follows. First, wait for a stock to make a final bottom after a decline. Second, wait for the first rally from that bottom. Third, wait for the secondary reaction that follows the rally. This secondary decline is the most critical part of the setup. It must hold at a level that is higher than the first bottom. This higher bottom is the market's proof that the selling pressure which caused the previous decline has been exhausted, and that buyers are now stepping in at a higher price level. The definite signal to buy, the safest point of entry, comes when the stock starts to advance again and crosses the top of the first rally. This is the final confirmation. The market has now proven three things. It has the power to stop declining, it has the power to rally, and it has exhausted the sellers on a secondary test. By waiting for this full sequence to unfold, the trader is not predicting a trend change. He is acting on one that the market has already confirmed. The same rule works in reverse for selling short. After a stock makes a final high, it will have its first sharp decline. This is followed by a secondary rally which must make a lower top, failing to reach the previous high. The safest point to sell short is when the stock then declines and breaks below the low point of the first sharp decline. By patiently waiting for these secondary tests to complete, the trader avoids jumping into a false move and acts only when the evidence for a new, sustainable trend is overwhelming. To identify these specific turning points and breakouts with precision, William Delbert Gann relied on his meticulously maintained charts. His charts were his lens for viewing the market's action, and they provided the final trigger signals he waited for. The two most important of these were the 3-day and 9-point swing charts. These charts were not meant for prediction in and of themselves. They were tools for trend confirmation. After a long period of accumulation and the crossing of an old high, the patient trader would watch his 3-day swing chart. The breaking of the last minor top on this chart would be his final, immediate signal to enter the market. As long as the stock continued to make higher tops and higher bottoms on this chart, the minor trend was considered up, and he had a rule-based reason to hold his position. The 9-point swing chart was used to track the more significant intermediate trends. Reversals on this chart were much less frequent and therefore carried more weight. A major bull move would be defined by a series of higher tops and bottoms on the 9-point chart. The first time the stock failed to make a new high and then broke the previous 9-point bottom, it was a major warning sign that the intermediate trend was changing. William Delbert Gann would wait patiently for these chart-based events. He did not care what the newspapers said or what rumors were circulating. His decisions were mechanical. Has the stock broken out of a long accumulation? Has it crossed an old high? Has it made a successful secondary test with a higher bottom? Has the 3-day swing chart confirmed the new uptrend? When the answer to all of these questions was yes, then and only then was it time to act. This systematic, evidence-based approach is the very essence of patient professional trading. It is a process of waiting, not with idle hope, but with the sharp-eyed vigilance of a hunter waiting for the precise moment to strike. To know what to wait for is a matter of technical knowledge. It is the science of reading charts, understanding levels, and identifying the definite signals that mark the end of preparation and the beginning of a new trend. But to possess the internal fortitude to actually do the waiting, to sit patiently for weeks or months while the market offers nothing but deceptive noise, is an entirely different discipline. This is the art of mastering oneself. Having detailed the specific setups that William Delbert Gann waited for, we now arrive at the final and most crucial part of his methodology: cultivating the mindset of a professional operator. This is the bridge between knowing what to do and having the discipline to do it. It is the final secret that separates the master from the chronic loser, who, despite knowing the rules, can never bring himself to follow them. The foundation of this master mindset is the complete and total elimination of hope and fear from the trading process. William Delbert Gann was unequivocal on this point. He wrote, "Hope will ruin any man who follows it in the stock market. To succeed, you must face facts, and facts are often cold and stubborn. Hope is the gambler's emotion. It is the fuel for averaging a loss, for holding on to a bad trade long after the rules have signaled an exit, and for entering the market without a definite cause. The average trader buys a stock and hopes it will go up. He has no concrete, rule-based reason for his trade, so hope is all he has to cling to. When the trade moves against him, this hope prevents him from taking a small, quick loss. He continues to hope for a recovery, a reversal that the market has given no indication of providing. As his losses mount, hope slowly curdles into fear. Fear of a total loss, fear of a margin call. It is in a state of panic and fear that he finally sells, usually at the worst possible price, near the bottom of the decline. The patient professional, as defined by William Delbert Gann, operates in a completely different psychological universe. He does not need hope, because his actions are based on knowledge and rules. He has patiently waited for a definite signal, the completion of an accumulation, the crossing of an old high, the confirmation of a secondary bottom. His entry into the market is not a hopeful guess. It is the logical execution of a predefined plan. Once in the trade, he does not hope for profits. He immediately places a stop-loss order to protect his capital. With his risk mathematically defined and limited, the emotion of fear has no room to take hold. His job is done. The outcome is now in the hands of the market. If he is right, his plan is designed to let the profits run. If he is wrong, his stop-loss order will exit him from the position with a small, manageable loss. Patience is the very mechanism that allows for this emotionless state. It is the discipline of waiting for a factual, rule-based setup that removes the need for hope, and the discipline of protecting that setup with a stop-loss order that removes the possibility of debilitating fear. This state of calm, professional detachment is not an innate personality trait. It is the direct result of diligent and relentless preparation. William Delbert Gann stressed that speculation is a business, and like any successful business, it requires a plan. He wrote, "Have a well-defined plan before you start trading, then follow that plan as the architect does in building a house." The reason a trader becomes impatient and emotional is because he is trying to make his decisions in the heat of the moment while the market is moving. The patient professional, however, has made his most important decisions long before the market opens. His patience is born from his preparation. This preparation involves hours of quiet, focused study. It is the work of maintaining charts not just for a few weeks but for many years, in order to understand the long-term habits and major resistance levels of a stock. It is the work of calculating the time cycles and the percentage points of past swings. It is the work of defining in writing the exact set of conditions that will constitute a valid, actionable signal. The prepared trader comes to the market not looking for an opportunity, but waiting to see if the opportunity he has already defined will present itself. He knows precisely what a valid breakout looks like. He knows exactly where his entry point will be. He has already determined the exact price at which he will place his stop-loss order if the trade is executed. With this level of preparation, there is nothing to be anxious about. There is only the calm, patient process of waiting for the market to meet the conditions of his plan. Impatience is the mark of the unprepared man. Patience is the hallmark of the man who has done his work. Finally, one of the most powerful and misunderstood aspects of patience in the Gann methodology is the discipline of being out of the market altogether. The novice believes he must have a position at all times to be a trader. William Delbert Gann taught that the opposite is true. The greatest profits are made by those who have the patience to remain on the sidelines, in cash, waiting for the truly great, high-probability opportunities that may only come along a few times a year. He wrote, "When in doubt, get out, and don't get in when in doubt." A trader who is always in the market will inevitably have his judgment warped. It is human nature to interpret news and market action through the lens of one's own position. If you are long, you will give more weight to bullish news. If you are short, you will focus on the bearish. An impartial, clear judgment is only possible when you have no financial stake in the outcome. For this reason, William Delbert Gann was a strong advocate for taking regular breaks from the market. He advised that a trader should, at least twice a year, close out all of his positions, step away completely, and allow his mind to rest and his judgment to clear. He knew that the market is a relentless and draining environment, and that a warped, fatigued mind is incapable of making sound decisions. The patient professional understands that the market will always be there. Opportunities are not a scarce resource. They are cyclical and will always return. It is far better to miss a potential move than it is to force a trade out of impatience and lose precious capital. Capital must be preserved for the rare A-grade setups. Patience in this context is not just about waiting to get in. It is the wisdom to wait on the sidelines, knowing that a period of no action is often the most profitable action of all. In conclusion, the great secret to trading success, as taught by William Delbert Gann, is a system of strategic patience. It is not a vague encouragement to wait and see, but a rigorous, rule-based methodology for professional market operation. This system is built upon three pillars. The first is knowledge, the deep study of past markets to understand the specific, definite signals that precede major moves. The second is preparation, the diligent, methodical work of maintaining charts and creating a well-defined plan before the market opens. And the third is discipline, the unwavering commitment to follow that plan, to act only when a signal is given, to protect every trade with a stop-loss order, and to eliminate the destructive influences of hope and fear. William Delbert Gann proved through his own legendary career that the market is not a guessing game. It is a puzzle that can be solved with mathematical principles and an understanding of human nature. He demonstrated that the greatest profits are reserved not for the most active trader, but for the most patient. His true secret was the profound discipline to do nothing until there was a clear, logical, and rule-based reason to do something. This is the ultimate lesson that separates the professional from the gambler, and it is the key that unlocks the door to transforming speculation into a consistently profitable profession.